Respected presenters, dear participants, ladies and gentlemen, the subject of my presentation is the Trump effect, analyzing the short-term economic and financial implications. Starting in 2022, Donald Trump's official campaign began uploading a series of policy plans to its website called Agenda 47, detailing how Trump plans to tackle some of the country's most pressing issues. Outlined in a series of videos and statements on the Trump website, the proposals were released during primary election season from December 2022 to December 2023. Agenda 47 is the manifesto of the Republican Party President-elect Donald Trump, which details policies that would be implemented upon his election as the 47th President of the United States. Trump's campaign pledges includes a wide range of areas from economic reforms to political initiatives. This presentation analyzes how markets responded to Trump's campaign pledges immediately after the election results were announced. On the economic front, he has proposed significant tax cuts, including lowering the corporate tax rate to 15% for U.S. manufacturers and extending provisions from the 2017 Tax Cuts and Jobs Act. He also aims to ease business regulations, pressure the Federal Reserve to lower interest rates, and to bring prices down very quickly. In trade, Trump plans to implement sweeping tariffs on imports targeting nations like China and Mexico, with rates ranging from 10% to 100%, while proposing measures to reduce dependence on Chinese goods. His immigration policies include mass deportations, restricting asylum claims, and ending birthright citizenship. On climate and energy, Trump has vowed to expand oil drilling, roll back green initiatives under Biden's Inflation Reduction Act, and withdraw from the Paris Climate Agreement, while supporting nuclear energy. Additionally, he plans to position the U.S. as a global leader in cryptocurrency innovation. Donald Trump's victory in the U.S. presidential election triggered a significant surge in the U.S. dollar index. The dollar index emerged as a key beneficiary of the election results, climbing nearly 2% to surpass the 105 level, reaching its highest point since July 2024. Following Trump's victory, foreign currencies depreciated against the US dollar, and markets expected to be the most vulnerable to harsher tariffs were hit hardest by the sell-off. The Mexican peso plummeted to its lowest level in over 2 years, while the euro was on track for its largest daily decline since 2020. The dollar gained more than 1% against the euro, pound, and Japanese yen upon Trump's victory. Following Trump's victory, inflation expectations in the US surge as his policy proposals are anticipated to reignite inflationary pressures. Two key elements of his agenda, tariffs and mass deportations, are likely to drive up costs for businesses, ultimately pushing consumer prices higher. Proposed tariff hikes could trigger a global trade war, raising prices for American consumers, since tariffs function as sales taxes paid domestically rather than by exporting countries. Businesses grappling with increased costs due to tariffs may see reduced profits, potentially leading to lower stock prices unless they offset these losses by raising prices, which would further fuel inflation. Additionally, Trump's plan to deport millions of immigrants could exacerbate inflationary pressures by creating a labor shortage, forcing employers to pay higher wages to attract workers. Together, these factors suggest a significant risk of rising inflation under his proposed policies. Trump's policy proposals are projected to increase the inflation rate by up to 1 percentage point, raising it to an estimated annual rate of 3.4%, well above the Federal Reserve's 2% target. After Trump's victory, market expectations for interest rate cuts by the US Federal Reserve have diminished. The anticipated number of rate cuts has dropped from 4 to 2, driven by expectations of rising inflation. Markets predict that a second Trump administration with policies focused on tax cuts, high tariffs, and immigration restrictions will push inflation higher, prompting the Federal Reserve to slow the pace of rate reductions. Following Trump's victory, expectations of rising government debt and larger fiscal deficits intensified. During his previous administration, US debt levels soared, driven by tax cuts and emergency spending in response to the COVID-19 pandemic, which also significantly widened the fiscal deficit. With his latest win, the prospect of additional unfunded spending, financed through increased borrowing rather than higher taxes, has raised investor concerns about the long-term trajectory of US deficits and debt. Some estimates suggest this could add more than $7 trillion to the deficit over the next decade. When investors question the sustainability of a nation's debt, they demand higher interest rates on loans to that government. Even before the election, worries over America's public debt had already pushed yields on existing government bonds higher, signaling increased borrowing costs for the US. This trend underscores growing unease over the nation's fiscal outlook in the wake of Trump's policy agenda. The yields on US 10-year Treasury bonds exhibited a positive reaction to the election outcomes. The benchmark 10-year Treasury yield reached a peak of 4.48%, marking its highest level in over 4 months, before experiencing a modest pullback. The rise in yields on US 10-year Treasury bonds reflects market expectations of higher inflation and larger fiscal deficits. Market participants anticipate that if Trump successfully implements his agenda, it will likely lead to greater deficits, significant tax cuts, and increased inflation, all of which are expected to drive long-term interest rates higher. Following the presidential election in the USA, the commodities market experienced a downturn, with the strengthening US dollar impacting oil and copper prices. A stronger dollar makes dollar-denominated commodities more expensive for holders of other currencies, leading to reduced demand. Following Donald Trump's declaration of victory in the US presidential election, US stock futures and indices, including the S&P 500 and Dow Jones Industrial Average, increased on Wall Street optimism for stronger corporate growth. US stock markets surged as Wall Street expressed optimism over the potential for stronger corporate growth under Trump's policy agenda. His proposed corporate tax cuts and commitment to easing regulations, particularly in the energy and financial sectors, are expected to boost company profits, providing significant upward momentum for the stock market. Cryptocurrency prices surged following Donald Trump's potential election victory, driven by his promise to establish the US as the crypto capital of the planet. Trump's sportive stance on cryptocurrencies sparked a significant market rally, with Bitcoin, the leading cryptocurrency, reaching a record-breaking high of over $75,000. This marked its largest single-day gain since March 2023. Thank you very much for your kind listening.